Hello guys, and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video, as per always, we're going to be analyzing the gold and the crude oil price chart. Let's start off here with the gold markets. Now, again, just want to say a massive congratulations to everyone in our private Telegram group. We had a massive short position all the way up from 1865 down to that 1830 area where we profited roughly 2%. So well done to everyone who managed to get involved in that trade over on our private Telegram group chat. We have actually indeed opened up a second position in gold here where we're currently making some money. Again, if you want to be part of our private Telegram group chat and streaming service, then I'm going to leave a clip at the end of today's video which will then explain those instructions. But for now, we're just going to analyze the gold charts and I'm going to try and explain where I believe the gold charts could be heading next. So gold has had a significant movement here, a key development in the past 24 hours, and we broke below the 0.38% fib level. We're now trading in between the 0.21 and the 0.38% fib level, as you can see on the chart. So that's in between that 1830 and all the way down at 1770. Now we had the 50 and the 200-day EMA. We did actually have a bullish crossover recently where the 50-day EMA pierced above the 200-day EMA. That's that red line there which has pierced above the 200-day EMA, which is that blue line. And typically speaking, that is a bullish signal. That says medium to longer term, it could indicate a bullish trend. We saw one all the way back at the end of 2018. We had the 50-day EMA pierce above the 200-day EMA, and as you can see on the charts, that took us all the way up towards $2,000. So sometimes these EMA crossovers can predict a new trend in the market, but this time around, with gold's price action at this moment in time, it looks to me that the 50-day EMA may be about to pierce below the 200-day EMA. So that could potentially form something what's known as a death cross, a bearish crossover where the 50-day EMA pierces below the 200. And of course, that then predicts that the gold chart could be medium to longer term bearish. So it looks to me that we could be trading down towards 1770, and that's because we've recently just broken below the 50 and the 200-day EMA. So, as well as the potential of there being that death cross, we have in fact broken below both the 50 and the 200-day EMA. We had the daily close there. Don't forget, this is the daily chart, and we had that daily close yesterday at around 1789. This is very bearish for the gold markets. The bulls, I do feel bad for you because you've been waiting all the way since August 2020 for us to see a break here in the gold markets. We finally got one, and when we hit that swing high up at 1877, it looked like we were going to break above and go target towards 1920. And if we broke above there, you're pretty much looking back at 2000s. But it looks to me as if this was just a complete false breakout, a very harsh false breakout, and at this moment in time it's looking very bearish for the gold price charts, and we could see a move down towards 1770. That could be the next target area, as it is that 23% Fibonacci retracement area. But let me cover the bullish side here for gold. If we were to see a complete reversal here, we got a daily close above the 200 and the 50-day EMA, this could then trigger a move back towards the 1830 area. But I cannot stay bullish here on the gold markets until we break above the 1830 area. I'm going to go ahead and put a tag there. 1830 is a key area in this market because it is that next fib level, that 38% fib level. And if we can break above there, then we go and test the swing highs up at 1877. If we can break above there, of course, we go up towards 1920. But unless we are trading anywhere near or above that 1830 area, then I am in fact bearish on gold, and we could see a further breakdown towards a swing low back here that occurred at the end of September down at 1723. Let's go and take a look at the crude oil markets. Now, crude oil, very interesting. We had the US come out yesterday, that was Joe Biden, and announce that they will be tapping into their oil reserves. I think I mentioned it in yesterday's episode that there was that possibility due to the fact energy prices are rising rather significantly in the US. In fact, a gallon of crude oil right now, a gallon to fill up your car of petrol, is costing roughly $3.55 in the US, which is a lot higher than usual. So the US have been left with no choice but to go and tap into their own oil reserves to try and help the rising energy prices. But the market's reacted in a very different way. Many investors would have expected it to go towards the downside, but we've actually bounced towards the upside, and we're trading up towards towards the 50-day EMA, up at $78.30. You would have heard me yesterday when we were trading pretty much on this fib level. That is the 61% fib level that I said that this trade is very 50-50 at this moment in time. You know, we could easily see a move down towards the 0.5% fib level down at $73.50, but equally we could easily see a move up towards the 50-day EMA. And I don't really want to guess. It was too short term for me, and I didn't decide to open a trade, and that was a very smart decision because, you know, we did go up and hit the 50-day EMA. And to be honest with you, I actually favoured a move further, especially if I knew what news was coming yesterday. But the markets reacted in a rather unpredictable manner, and we have now gone and closed. That yesterday's daily close was on or just above the 50-day EMA. So this makes it very interesting for the crude oil markets. Again, I've just posted a signal over on our streaming service on the private Telegram group chat. You can watch the end of this video to understand the instructions to be part of that group. But I do believe I know which direction the crude oil markets will be heading now. But this is very important that we've had that daily close at that 50-day EMA, and that could trigger a move up towards $80. And I've marked $80 on this chart because it's a key area, and we could potentially see a move all the way up towards $85, which is the swing highs. That's a 12-month high here for the crude oil market. So times are getting very exciting here for the crude oil markets. RSI is down at 45, so that gives us plenty of territory to run towards the upside. But that's it for today's video. I thought I would just touch bases. We've seen a lot of volatility over the past couple of trading sessions. What I would warn you all about is that, of course, tomorrow in America on Thursday, it's Thanksgiving, so the markets will be shut. And what traders typically tend to do when it is a public holiday here is that they will take the Friday off. So that basically gives them a long weekend. They can take Thursday off because obviously it's public holiday. They take Friday off, and that makes it a long weekend because, of course, Saturday and Sunday the markets are shut. So this typically means on Friday the volatility in the markets may be very low due to low liquidity. You know, there's not that much money, as many traders won't be sat at their trading desk. So don't expect too much volatility. I wouldn't be surprised if the markets just trade flat for some time. But I thought I would just give you guys a warning if you do wonder as to why the markets are trading sideways. But there we go. That is my analysis on the gold and the crude oil markets, and that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.